It's the Chelley Roy Show. It's the Chelley Roy Show. It's the Chelley Roy Show, and it's going down. You can laugh, you can learn. Chelley Roy, it's your turn. You can laugh, you can learn. Chelley Roy, it's your turn. You can laugh, you can learn. Chelley Roy, it's your turn. You can laugh, you can learn. Chelley Roy, it's your turn.
Love you guys. Good evening, and thank you for tuning into the Chelley Roy Show. I am your host, Chelley Roy, and we have an amazing show for you guys tonight. Tonight's segment is Everything Real Estate Power Hour. You guys are in for a treat with our amazing experts. So before we get into the show, I want to start off by thanking our sponsors. The Chelley Roy Show is sponsored by Built on Survival Skills Apparel. We're also sponsored by Liquid Lipo, where you can lose up to a pound a day. So anyone that's interested in tips on how to become a boss, be sure to check out ShelleyBossUp.com. I also want to thank my makeup artist, Amber Singletary, my photographer, Stephen Tucker, and my executive producer, Mr. Delmas Luther. So you guys stay tuned and don't go anywhere. We'll be back right after the break. Welcome back to the Chelley Roy Show. I am your host, Chelley Roy, and joined with me today is the experts, mortgage lender, and expert real estate investor. You guys help me welcome Mr. Steve Twyman and Mr. Norman Harvey. Welcome, guys.
Thank you.
Welcome.
Appreciate it.
So listen, I am so excited to have you guys back. I mean, I'm excited for a number of reasons. I mean, when we institute and provide knowledge to our community to help push them forward, that's always helpful. And I know you guys were here last time. The information was powerful but brief, and we got so much feedback, so many questions, and so many phone calls. So it was important for me to extend this segment so that we can do it for an hour to push out more information. So we have a lot to talk about. We have so many questions that came in from the Facebook viewers, and we have questions from the audience. So let's get into it. So I know we have several topics that we're going to get into, and I know one of the ones, we have a top 8. So one of the topics is alternative lending options helping self-employed purchase homes.
Yes. I am so happy that they have
lifted a lot of the restrictions in lending to accommodate our self-employed borrowers. Not everybody, they're not filing taxes the right way, if
Right.
they even are filing taxes. So a lot of the banks that they've been banking with for 10, 20 years, they keep all their money at, won't give them loans.
Wow.
So the advantage that we give is we give them leverage because we have alternative options, if you will, that will allow the self-employed to secure lending.
That's great.
Yeah, so just to name a few of them, the most popular one is the bank statement loan. We can literally use your bank statement, look at your gross deposits, and create a formula that gives us a monthly income that we use to qualify you.
Oh,
If
wow.
yeah, and so what's significant is if the deposits are in a personal bank account, right? We can use 100% of that deposit to qualify you. So if you have $10,000 a month going into your personal account that we can properly document, have a proper paper trail, so to speak, then that 10,000 a month becomes your income.
That's amazing.
Yes.
That's actually
And
helpful.
when it comes to the business bank statements, we use 50% of that deposit, so it would be 5,000.
Gotcha.
Because they look at it as the business having operating expenses.
Gotcha. Makes sense.
Yeah, the next most popular one would be the 1099 loan that one just came back.
Yes.
So a lot of people get paid 1099 at the end of the year. We use
Independent
that 1099 to qualify you.
Wow.
All right.
That's good stuff.
And then a big one, which is very easy, by the way, is the asset depletion.
Okay.
So with the asset depletion, basically we look at your gross assets. We divide it into a 3-month or 90-day window, and whatever that monthly total is, that's what we use to qualify you.
That's smart.
Yeah. And then there's some other limited income documentation loans that exist to also help individuals secure homes, whether it's a primary residence and or an investment property.
Gotcha.
Wow.
Okay, now, is that a formula that you're using just solely for your company, or is that just the industry standard?
It's not just limited to my company, but companies that are set up like mine as a broker.
Gotcha.
We have a lot more leverage. We like to say we do what the banks do, excuse me, but we also do what they don't. And that gives us a lot of leverage. And that's one of the reasons why I had the option of being a physical bank, right? But I felt that for what I wanted to bring to the real estate environment, I would be limited.
Absolutely.
And so it allows us to expand our territory, so to speak, because we do have these alternative options that aren't being offered by the traditional banks.
That's important. Leverage is definitely key. Thank you for
Wow.
that, Steve. So, we've had a lot of questions that came in through
Great.
the viewers. So, a couple of these questions are from the viewers.
Okay.
Is it smart to refinance your home after 10 years?
There's never a bad time to save money.
Yeah.
Right? And depending on what your true motivation is for your refinance, whether it's to pull some cash out to invest in a business, buy another investment property, maybe pay for a college education, whatever the case may be, when it comes to refinancing under those types of perspectives, look at it as if you're borrowing money at a very low interest rate, right?
Right,
And it's tax deductible.
right.
It
That's
beats
smart.
going out getting a loan where you're paying 28%, depending on your credit profile. You come and you refinance, do a cash out, or whatever the case may be,
Right.
and you're now at a 2 or 3% interest rate,
That makes
depending
more
on your
sense.
credit profile, and it's interest that you get to write off. So that right there is a powerful benefit that's on the table when it comes to refinancing. We often have people refinance sometimes within a year. Because the way the market is right now, the market is very aggressive, right?
Even if there's not enough equity, because typically you don't have a lot of equity.
Well, it just really depends on the type of loan that they're currently in.
Gotcha.
So if they're in some form of a government loan, whether it's FHA, VA, or USDA, right? Those loans allow you to refinance what we call like a streamline refi,
Okay.
where we just bring it down your interest rate to help you lower your monthly payment.
Gotcha.
All right. On the conventional side, that one is more equity driven.
Okay.
But with the market being where it is right now, your house might appreciate 10, 15, 20% overnight
Wow.
because the demand in the market is very aggressive in this current mortgage climate. So once you hit that 20% threshold, if you're in a loan that has mortgage insurance, And depending on the amount of property you have, that mortgage insurance could be anywhere from $200, $300, $400, $500 a month.
Wow.
So why not, if you're at a 20% equity appreciation, why not consider refinancing just to drop the mortgage insurance by itself? So those are some of the different reasons why. So the 10-year span, I wouldn't necessarily say that. Most people, when they get in a home, usually within year 2 or 3, they're in position to refinance.
That makes more sense. Yeah. Okay. No, that's a good point. Next question is for you, Norman.
Okay.
What are your thoughts on new construction inventory?
Well, first, I love new construction. New construction is good. Right now, the inventory is getting low because right now the market is so competitive.
Yeah.
And right now, a lot of buyers are getting outbidded, like on your typical resale houses. Well, no. I'm talking about on the resales.
Oh, okay.
So a lot of typical people that wouldn't buy new construction,
right,
they're running over the new construction because they figure they don't have to bid, bid.
Makes sense.
In the market or whatever. So right now, new construction is on fire. But right now, being as though it's so on fire, they're running. The developers are running out of land.
Wow.
You know what I mean? They can't keep up with the demand because it's so crazy. So I have I think I have about 3 clients right now on a waiting list
for new construction
in different developments.
Wow.
Yeah, I'm talking about long waiting lists. Yeah,
Wow.
and they saying that in some developments, it's crazy. Yeah.
So what do you do? I mean, especially when your client is focused on getting a new construction as opposed to the bidding war. Like, what do you do in a situation
they just gotta stand by.
Okay.
You know what I mean? Unless they just want to dive back in.
Gotcha.
They really want new construction. I just advise them just stand by, be patient.
Gotcha.
Let's see what happens. Yeah.
Patience is definitely key for that.
Yeah.
Good answer. The next question I have for you is, why is the buying market so saturated during COVID? People are buying houses left and right.
Right, good question. Well, what's happening is, as you already know, as soon as COVID-19 hit, a lot of the interest rates went down, and Steve can contest for that. So they at 2%, 2.5%. This is historical lows.
Yeah, get it wise.
Yeah, you know what I mean? So what's happening is you have all these buyers, and you have very little sellers.
Yeah.
You know what I mean? So right now, that's why, like you said, everything is so in demand, the houses, but we don't have a lot of sellers. You know what I mean? So it comes back to supply and demand. No supply, a lot of demand.
Absolutely.
Yeah, so that's why all these bidding wars are going on, and people are getting outbidded for houses because not enough houses.
Yeah.
So we have a lot of people trying to buy.
And that's going to continue for a while too.
It is.
Until it kind of tapers off. So
it is.
No, that's a good point.
Yep.
So back to you, Steve. How do you know when you're totally ready to purchase a house? Or that could be for Norman, whichever you guys want to answer.
The minute that it is put in your mind and your heart, you're at least mentally ready.
Okay.
Right? So now it comes time to prepare. So one of the things that I challenge individuals to not do is try to do it themselves. So I use this analogy. Usually when your car breaks down, the first thing you do, if you're not a mechanic,
go get a new
first thing you do is, no, that too. But usually first thing you do, you lift up the hood, you see some smoke over here, you see some oil dripping over there, hear this little ticking noise, but you're not a mechanic. You can't figure it out. You have to then take that car to the mechanic so the mechanic can diagnose the car, then tell you what it's going to take to get that car back home.
Right.
That's what we do.
Gotcha.
Let me analyze it. Let me just see, or any mortgage professional, let them see and analyze where you really are, and then they're going to give you the guidance. Because again, it's the most important thing, and I think we discussed this the last time, was putting a plan in place. Everybody's not going to be ready. You're going to have some that are going to be ready. They're going to have the credit profile. They're going to have the assets and the capital, to make it work, right? But the minute it's put on your heart, the next step is let's put together a plan. Right. It might not be today. It might be next year. It might be 2 years from now. No, but if you have a plan in place, then you usually get the result that you want.
That makes sense. Yeah, you have to have steps in place. Perfect. Next question is for you, Norman. For those that need help with the closing costs and down payment on a house, what are your thoughts about down payment assistance?
This is going to get interesting.
I get a lot of buyers that need help. You got different angles, different ways you can get it. You have programs, that you can go through sometimes, and Steve can talk about lender credit. Sometimes you can get buyer credit, you can get from your agent like myself. So it's just different ways that, you can go about getting, assistance, to buy a house.
Gotcha.
So it's just different options you can go with.
What are the most popular ways that you encounter or that you recommend to your clients?
It's programs.
Gotcha.
Yeah. So you just got to see what program that you qualify for, and usually your lender, they'll advise you on that part.
Gotcha.
Because they have like different qualifications or whatever. So you just got to make sure that you're qualified, for this program or that program. But that's pretty much the most popular.
And we're in a seller's market right now.
Yeah.
So with it being a seller's market, there are a lot of challenges with that. As Norman mentioned or referenced earlier, it's a competitive situation. So you got to put in your best and final offer. And sometimes they don't want to hear program, especially when you may have a cash offer on the table or some form of an escalation clause in the contract that might require a little bit more. So we're not telling you to shy away from the programs, but it's always important that you know or understand the pros and cons that may come with that decision.
Gotcha.
All right. So it's always our primary focus, Norman and I, is to make sure that you're ready based on your circumstance.
Absolutely. Yeah.
Every client is different.
Absolutely.
I don't care who it is. They can call, check the internet, talk to their friend. Their experience is going to be totally different because we're dealing in a today perspective with a today understanding on your situation, right? So all of that is put on the table. It's for disclosure. When we do our consultations, we got to let you know, hey, look, this program might prevent you, especially if you're in a certain price bucket where these houses or the inventory for these houses are moving pretty quickly, and they don't want any nonsense. Because some of these programs require a second underwrite. Right, so
which makes the process longer.
And they're ready to get out of this, get the contract ratified, and hurry up and get the settlement within 2 to 4 weeks. Fortunately, there are some grant programs that do underwrite in a normal 21 or 30-day cycle, but their requirements may be very strict. They don't want to see NSFs, overdrafts on your bank statements. They want to make sure that your taxes speak the truth, so to speak. They may cap the amount of house that you will qualify for without the program. So these are some of the things that have to be put on the table. Yeah.
Makes sense. Great answer. I love this. Aren't you guys enjoying this? Great information, right? Very informative. Very informative. This question is for you, Norman. If I'm thinking about selling my house, should I list it now during COVID?
Yes.
Yes, why?
It's a seller's market.
Okay.
Yeah, houses are, on the market, Friday, under contract Saturday.
Wow.
It's crazy. Sellers are getting
double?
Not even double. And I heard this, right? One seller got $100,000 over
the asking price?
The asking price. And I'm talking about.
So you guys hear that. This is a seller's market.
Crazy.
So if you guys are looking to sell during COVID, now is the time.
Yes, now is the time.
I just had $150,000 over.
Yeah, it's crazy.
Wow.
Yeah.
Wow.
They're throwing appraisals out the window now. It's if it appraised for less, but we have it this, you must now agree to pay the difference.
Wow.
Yeah.
All right. That's good stuff. Yeah. We're going to go to a quick break, and we will be right back. All right. Welcome back to the Chelley Roy Show. I hope you guys are enjoying this informative Power Hour Real Estate with Steve Twyman and Norman Harvey. You guys are really giving up all the information. Some great gems for sure.
Thank you.
Great gems for sure. So let's get back into it. Steve, this question is for you. Do you think the market will get so inflated that it will change from a seller's market to a buyer's market?
By law of nature, yes. It
Yes.
absolutely is. I've seen this trend before. I've been doing this almost 20 years. And so I remember when it was like this before. So as Norman mentioned, with limited inventory, there's a pool of houses that haven't even been released because they're going through some form of a foreclosure perspective. And so that is going to help release a lot more inventory when these houses become available. Some sellers are just waiting because they know that the demand for the housing exists, so they're monitoring what the activity is in their neighborhood until they're ready to say, okay, now this is the number we want to be at before we release. And then there are a couple of other factors that will come into this real estate environment that should help the inventory turn itself around. Because this is new territory for me to see a limited amount of houses with all of the grant monies and programs that are available. Usually when the grant programs and stuff are available, there's a nice housing inventory to accommodate that.
Makes sense.
Yeah.
No, that's a good point. This next question is for you as well. What is the recommended process for someone who's never bought a house? And actually, either of you can answer.
I'll take it. Well, the process is, again, once it's put in your soul that that's what you want to do, then you need to consult with an industry professional to start putting that plan in place. If you want me to be a little bit more bullet pointed, definitely monitor your credit. All right. There are different platforms of credit. So a lot of people think the online credit agencies, I won't name them today, right?
I think that's helpful though, because I even kind of get twisted up a little bit.
So this is what I hear often.
Yeah.
Credit Karma has a different credit score.
That's
than what
where
you
I was
have.
getting ready to say.
Right. So that's just
on
one
that
example.
a little bit. Yeah.
And we do, because that's more what we call a consumer credit, not a FICO credit. So on the banking industry, we pull a FICO credit.
Okay.
And with our FICO credit, you literally can take my credit report, apply for a job. It's the most aggressive when it comes to the information. And so oftentimes there's going to be a vast difference between the two. I've had people that call me depressed and say, hey, I don't qualify. I'm hesitant on you pulling credit. We get to a point where they allow me to pull credit and they're more than qualified.
Wow.
But I've also had the opposite effect. Hey, Credit Karma said I'm 800 credit score. My free credit report say I'm 700 credit score, and I pull and it's not 700 and they don't qualify. So we often run into a lot of resistance as a result of that perspective.
Wow.
It's definitely confusing. So you wouldn't recommend Credit Karma if
Well,
you're trying to.
again, I don't say that I don't recommend them, because there are times that I will consult a client to take advantage of their technology for various different perspectives. Like if I'm doing some type of credit restoration, then I'm going to say, hey, look,
Got it.
I don't want to keep pulling on my side because that is a hard inquiry.
Okay.
But you have access to this information, and if it's some positive activity, that means that usually that positive activity on this side will resonate to the positive activity that we want on that side.
Right.
Got it.
Right.
The other thing that is important is that you really get organized. We're in a different real estate climate. It's a lot more aggressive, a lot more demanding, and there's a lot more tension because, with it being a low inventory, people just not making the money that they used to accustomed to
true.
making.
Yeah.
So it impacts everybody. And even like on the lending side, if we don't get the deal closed, title company don't eat. The real estate agents
It's a
don't
trickle
eat.
down.
The sellers don't get the money that they want. The buyer don't get the house.
Sure.
So you being organized with your paperwork is vital when you're going through the pre-approval process.
That makes
and
sense.
that on a full documentation loan, you're talking making sure you have your most recent pay stubs, making sure you have your taxes in order and properly filed, making sure that you have your W-2s from your job. All of this stuff is important. Make sure that you have your bank statements and that have the most recent and accurate activity. All of that is vital to your success. And if you have like a 401k, TSP, stocks, bonds, something like that, all of that information we need to see. I know that the mortgage business is intrusive, but who can you go to and basically say, hey, I want $300,000?
Yeah.
Right? For whatever reason, without any type of vetting,
Yeah.
so to speak.
Nowhere.
And I often tell people, I'm not really a mortgage business, I'm a risk assessment business. I have to evaluate the how much
The
risk are you
risk,
going to be
yeah.
to this pool of money that I'm going to get.
Absolutely.
Get you.
Absolutely.
Right. So being organized with credit and your paperwork is probably the most important perspectives today.
Okay, great tip. And then I have a couple follow-on questions. So
Sure.
going back to the credit reporting agencies,
Mm-hmm.
clarification, you said you would recommend a client to use Credit Karma if they were going through
Some
like
type
a
of credit restoration, yes.
restoration program.
Right.
Just so that they can kind of monitor it and not necessarily for monitoring it.
Right, for their
as
credit
opposed
score.
to preparation for a house.
Correct. Now, it's crazy because when it comes to credit, it's really a computer that's using analytical data,
Sure,
making a human judgment call in a non-human perspective,
right.
right? So these computers sometimes don't get the information. Like I had a client, they was like, well, my Credit Karma said that my credit scores was this, and then I looked at the FICO side, I figured out what the issue was. The computer, here we are in April, didn't update their credit since February.
Oh, wow.
So
That's a
all of
huge
this
issue.
positive
Yeah.
information that may have been centered over here hadn't resonated on the FICO side.
Yeah,
So
it
we
wasn't
literally had to get the client to contact their creditors and say, hey, when are you going to actually update on this side?
Wow.
And when they did the update, we got the result that we wanted. We got the credit profile to get this client approved to buy their house.
That makes sense. No, that's good information, especially on the credit reporting side, because I know Credit Karma kind of threw me off a couple times.
Yeah.
And Norman,
Me too.
I saw that you recently did another real estate educational informative segment, and something that you said really stood out where you were focusing more on, or you basically said, in terms of buying a house, what you really need to focus on, in addition to what Steve said, was your credit score. And I noticed that you said, don't really focus on whether or not you have that 580 or 600, because that's what most people are under the understanding of, is that at bare minimum you could have a 580. But what you said that stood out to me was, don't really focus on the 580 or the 600. Try to go as high as possible, because the difference is paying that $1,300 versus $1,800 on a $300,000 house. So that stood out to me. So
Yeah, and that's what it is. Like, you just gotta, because I get a lot of clients, like I was saying on the other segment, like, they had the 620 and they're like, Norman, let's do it. You know what I mean? Let's go buy a house. I'm ready. And I'm like, not really. You know what I mean? Because my clients, I want them to take advantage of the super low interest rates. Because right now, it's like.
that was super key to me when you said that. That was
Yeah, I want my
wow.
clients to take advantage of them. You know what I mean? Because right now, like, we still at 2.5%, Steve? Or we?
Yeah.
Okay.
For the right credit profile.
Yeah, for the right.
All goes back to credit, right?
It's the lender right here, yeah. So yeah, with the like the 700 credit score, you can get that 2.5%, and then just like you said, that's the difference between you paying $1,300, you know what I mean, for a $300,000 house, and somebody paying $1,800 because they only have that 620.
Wow.
You know what I mean? So me personally, I would suggest all my clients to work on their credit to try to pay that
Yes.
$1,300.
Because you
instead
think
of
a
paying the
620 is
$1,800.
good, but like
You
you
do.
said, wow.
Yeah.
I mean,
We definitely have a lot of work to do as a community.
Yeah.
For sure. No, you're fine.
Yeah, I try not to rush a client. I mean,
Yeah.
some are anxious. Now, if you are in a desperate situation and your credit scores are on the lower end,
Yeah.
you
You can help in that situation, too.
We can definitely
Right.
help in that situation because it's really about getting in.
Yeah.
And so they always ask, when is a good time or bad time to buy and sell real estate? There's never really a good or bad time. You just have to adapt to the market environment
Right.
and climate that you're in. So you can get in, take advantage of it, because we'll always be able to come back and sweeten it up a little later down the road. But from a firm perspective, we want to give you the best from day one.
Absolutely.
Right.
And that makes
So,
sense. Yeah.
so yeah, we, and that's where Norm is going. Like, hey, I know you're here. I know we can qualify you. but why not let us put you in a position where we
Yeah.
can give you even better?
Right.
So if you're just a little bit
Patient, yeah.
and just tweak a couple of things, we'll get you there where we can give you the best.
Right.
And
No,
that's
that
what
was-
it's
that
really
was
all
great.
about. Yeah.
That was a great tip because, like you said, you
Yeah.
don't want to be house poor.
Right.
That's the last
Not
thing
at
that you
all.
want to do. So
Yeah.
the
I'm
key
telling
that
you.
I got from that is being organized and making sure that you really work on your credit score.
Credit, yes.
So that's
Important.
key in terms of once you feel it in your heart and make that decision that you really want to purchase a home.
Most definitely.
And as far as like the bank statements and things of that nature, I know you said that the lender kind of goes deep and they're very specific about certain things, no NSFs and things of that nature. How far are they going back
1
for
year.
bank statements? Oh, it's a year?
Yeah.
Oh, wow.
Yeah, so, and no NSFs in the past year, 12 months. And the reason why, just so I think it's important to put the reason why.
Because I thought it was 3 months at first. They really
It used to
get
be,
into
but
it.
well, COVID impacted the loss of jobs during COVID, impacted the tightening up of the criteria. But the third and probably the most important fact that I wanted to put on the table is that we can put people in all these different programs, right? But if they get in these houses and they don't perform, meaning the client get
Yes,
in
they can't afford it.
and don't make their payment, even if they can afford it, right? But if they don't make their payment for whatever reason, it creates a disastrous impact on the mortgage and real estate climate.
Makes sense.
So it creates a tug of war between lenders
And
and
banks.
real estate agents, because it almost forces us, and I hate to have to be frank, but it almost
be
forces
honest.
us
Yeah.
to discriminate,
Yeah.
right? To say, hey, I'm not going to touch this client, even though I know I could, but I'm going to stay away from this client because I know this client is not. When you ask the client, what happened with your credit? I just didn't feel like paying them. Well, maybe you're not going to feel like paying this mortgage.
People actually say that?
Yes, I've heard it a million times.
They just don't pay the mortgage?
Yeah, and then it's really rough because what it does is it impacts the
Wow.
real estate community in a large scale. Because if you want to keep the rates low, we got to keep the mortgages to perform.
Right, you got to be fair.
Right, but this pool, and it's the thing called Neighborhood Watch, where they actually monitor lenders and the type of transactions that they do, and they penalize us for that. And I just taught a class on that with class that I teach, and I showed them the Neighborhood Watch, and I'm glad I'm not on that list. I've been on the list before, right?
Absolutely.
But I cleaned it up. We started taking on the right type of business. And it's not that we don't want, so normally those clients that we feel might be a high risk, we put them in a position to prove the worthiness.
Yes, absolutely.
Right.
No,
We're
that
just
makes
not going to
sense.
give it to you, even though we can, right? Prove your worthiness because, one, we don't want you to have a negative impact on the real estate culture
Absolutely.
at large. It's not about us, but it's about the bigger picture.
No, that makes sense. And
And
like
so-
you said, you're
and-
taking
yeah,
a risk
yeah.
as well.
And then it tightens up the money, it tightens up the guidelines because if they're not performing, these banks, and I've seen it happen, we had a program called the Shinoa Grant. A lot of banks stopped doing them because they weren't performing. People was getting these houses for little or no money and they had no real true skin in the game, right?
Wow.
And because of that, it's like, all right, you gave me this Mercedes-Benz instead of me having to put down this 10% down payment. I'm going to drive and dog the car. So that's how they treating these houses.
Wow.
And then even at a much larger scale, and it's starting to correct itself, the government, they started allowing people to do forbearances on their mortgages. Whew, that was rough. That was a rough period. I had a client, almost took me a year to get this individual in their home because they did a forbearance, and technically when you do a forbearance, that's almost like you being in a foreclosure state.
Oh, wow.
And a lot of people didn't know that. So the government said, oh, COVID, we're going to allow you to not have to pay 3 months of your mortgage payment or whatever specified period of time. And clients who wanted to move up, buy bigger houses, refinance, they were heavily impacted by it. I still feel the effect on it because I work with a large volume of clients. I still feel the impact of it now. And I'm like, you're in a forbearance. It's saying that you're not making any mortgage payments. So the government jumped in and changed some of the perspective. But it still made it real difficult. A lot of people don't even realize that technically that's treated as a foreclosure when you don't make your mortgage payment.
That's a
over a specified period of time.
No, we're going to touch back on that, but we got to go to a quick
Yeah.
break, and we'll be right back. Welcome back to the Chelley Roy Show. So things just got heated and heavy with regards to forbearance. So I think it's very key and instrumental that you guys understand the differences between forbearances and deferments. So this last part of the segment, we're going to open up Q&A for Steve and Norman to the audience as well as our Facebook viewers. So we're ready for the first question. This one behind you.
Asking for a friend. So if you own your own lot, and so say the lot is worth, say, $300,000, and you want to build a house, and the builder's saying the house is going to cost $500,000 to build. How do you approach that in terms of, I know there's a temporary loan to permanent loan thing, but what makes sense? Like, what's the process to do that?
That's a great question, and I'm glad that you asked that. So there's a new product. Well, not new. There's a program that's called a one-time close. The key for this is the builder will be vetted, and you want to get the builder approved first with whatever lending institution that offers that program. So once the builder gets approved, then if you already have the land, it's just a matter of, okay, we'll give you the funding for the construction. And usually with new construction, what I like about these programs is that once the house is completed and ready for delivery, the equity has skyrocketed.
Yes.
So most people with new construction, based on the nature of the question, might walk away once it's all said and done with $300,000 in instant equity. All right. But the one-time close is the program that fixes that. So you get the builder vetted. The client is already vetted as far as credit worthiness and the ability to repay, and then you just structure the loan based on the perspective of the agreement that the builder said they would build the property on. And after that, it's a one-time close. So they close you, you go to a regular settlement, and then there's draws that are given to the builder throughout the process of them building. Once it's complete, they do a final draw, they update the title, send out a new appraisal, get a new appraisal update, and that's pretty much it. And then the loan then transcends into what is called a fixed loan for the remainder of the 30 years.
Gotcha. Great answer. Did that answer your question?
Yeah, quick follow-up. So if you own the land, do you put down less money because you have equity? If the land is paid off, what equity position does that put you in terms of the down payment?
Yeah, it just really depends on the credit, but usually there will be some form of cash injection. I would probably say somewhere in the neighborhood of 5 to 10%. Don't quote me because that program comes few and far between. But for something like that, I'm a phone call away. I can actually look at the guidelines and make sure that I give you some firm information on that, or I can actually send you the guidelines so you can kind of get familiar with that.
Okay. Yeah. Perfect. Great answer, Steve. Thank you. Next question.
Yes. Do you know if the home warranty covers all repairs?
Did you guys hear that? Does the home warranty cover all repairs?
Usually the home warranty, that covers appliances, HVAC system, the electrical system, the plumbing, parts of the house. So, like a lot of maintenance type of stuff, you know what I mean? Yeah, so anything plumbing, electrical, just general maintenance, yeah. So that's pretty much what
if you have like a foundation problem, something like that, it won't cover that.
Yeah, it won't cover that. Yeah. But it's definitely good. Important. It's a great investment.
Yeah.
Great investment.
Yeah. So you also want to make sure that you do a home inspection to try to prevent and avoid
those issues.
Yeah, those types of issues. If you have a foundation or some type of a leak in the basement that wasn't discovered, you want to make sure you get a great home inspector out there to troubleshoot that for you.
That's a great point. True. Yeah. Next question. You guys don't be shy.
This question's for both of you. Since you've been in this business, what has been the best experiences that you've had and the worst?
Okay.
All right. It's always a good experience when we hear those words clear to close.
Yeah.
And we're able to slide those keys across the desk. Some of my worst experiences, and I'll just be right afford.
Yeah.
People still commit loan fraud. We still get fake
Wow.
bank statements, fake pay stubs.
Jesus, and they make it hard for everybody else.
They will allow the application, and it just doesn't feel good because naturally, when something like that is exposed, it forces us to have to do a lot of extra work to make sure that everybody
Right.
understands it wasn't us
It wasn't you.
that prevented it. So we actually literally have to log where the paper trail came from and all of the above.
Wow.
Yeah.
What about you, Norman?
Well, my best experience is just like what Steve said. When we get to the settlement table, you know what I mean? Because it's
Yeah.
like,
Cut the check.
well, no, not necessarily cut the check. It's just, my clients getting their keys because,
Yeah.
I post the pictures and stuff online, but people, like, they don't know the
Yes,
journey.
It's a celebration.
You know what I'm
Yeah.
saying? Yeah, the celebration, like, it's real because they don't know the actual journey behind the celebration.
Absolutely, yeah.
And half of my clients have been with them, like, for a year, 2 years. You know what I mean?
That's
We almost
great.
like family, you know what I mean?
Yeah.
So once I finally see them get those keys, so for me, that's like, kind of warms me up, you know
Oh,
what I
for
mean?
sure,
I'm just
for
super
sure.
excited for them.
Absolutely. No,
You know
I
what I
can see
mean?
that.
Yeah, so that's my biggest thing.
What about your worst experience?
Works experience, and I was actually on the segment that I did on Monday, I talked about it as well. I had a client last year, 2020, of course, during COVID, and she was about to close on her house. I'm talking about like 2-3 days from closing, right? And she called me crying. I was like, yo, what's going on? You should be excited. She said, Norma just got furloughed.
Yeah.
You know what I mean?
Yeah.
I just got furloughed.
Because they do another check like right before, right?
Most
Yeah,
definitely.
the
Most
day
definitely.
of in some cases.
Most definitely.
Jeez.
Yeah. So the lender said they couldn't do the loan for her, so she couldn't close. So
I had a ton of that happen as well.
yeah. So that was a rough
And it's
one.
traumatizing because
Very.
Mm-hmm.
Yeah. You go through the
It-
process
it's-
and you get that
you
close.
That close.
done got the moving truck ready,
Ooh.
you
Yes.
done canceled your apartment.
Yep.
Oh,
The
God.
seller they got their moving truck ready, they
Same
ready to
thing.
get out.
Yeah.
Not that it's about the money, but nobody gets paid.
Yeah, absolutely.
Yeah.
Oh, that
so that
sucks.
was a rough one.
Great question. Next question, guys.
I have a question in regards to your comments regarding Credit Karma and the FICO score.
Sure.
What's your range, or what could possibly be the range that you're looking at a score of 650 on Credit Karma, but it's different on the FICO score?
Yeah, I've seen it as far as high as 100 points.
It's off that. Wow.
Yeah,
That's a huge difference.
it's a huge difference.
It
Yeah,
is.
I mean, I literally hate to say it. I got to argue. Well, I didn't argue, but the client argued with me. Well, this is what it says my credit.
Yeah, because
score
if you don't know, you don't know.
Yeah.
You're stuck on that Credit Karma.
Right.
Yeah.
And I get it. I want everybody to definitely be serious about credit literacy.
Yes.
Because it drives the world today. I
Mm-hmm.
mean, you got to apply for credit to get a car. I mean, house, credit cards, you name it, you got it. And there's nothing wrong with having credit. Let me just be frank with that, right?
Mm-hmm.
It's just how you manage it.
Right, of course.
That's how you manage
Mm-hmm.
it. That's it. Keep your utilization to 50% or lower. Make sure you pay them on time, and you're going to be fine. But yeah, oftentimes I've never seen two identical credit reports between the outside credit reporting agencies versus the external. So this kind of rule of thumb, whatever I pull, if you went to Wells Fargo, Bank of America, SunTrust, PNC, Navy Federal, you name it, you
They're
got it,
never
right?
gonna be insane.
They should all have. We should all have the exact same credit report.
Okay.
That's how disparate the difference is. So when
Right.
you go to a banking institution, if it's 700 there, I should have 700, especially, and then they give you like a 10-day window to shop your mortgage
Sure.
around,
Yeah.
just for that very purpose, unless there's something adverse that happened in between the credit pulling cycle.
Right.
Yeah.
Makes sense.
Wow.
Great question.
My question was, during COVID, some people lost their jobs, right? Okay, I found some property. This question is for Steve. I found some property, Steve, that I was going to use for investment property. Mm-hmm. And I went. I had the credit and everything ran, and upon having the credit and everything ran, the gentleman called me back. And he wanted check stubs and all that. So he said, well, where your wife check stubs? I said, well, we're doing the COVID. My wife was off for a while, He said, well, we're going to have to just use your income. I said, well, hold up. We won. We is one. I said, he said, well, your credit good. He said, your wife's credit is good. Your credit good. He said, but it's her income. I said, well, you can keep the property then. I said, because my wife, he said, well, your wife's name can go on the deed. I said, nah. I said, if my wife's name can't go on the loan, I don't want the property. So are they taking in consideration from the COVID people, without their income? Are they just saying, well, no, they didn't have no income, nothing we could do?
Well, the key to that question is your ability to repay. And that's what they're really looking at. And if you can't properly document the ability to repay, they consider that a high risk. And yes, COVID did have a huge impact on that. I mean, there are some programs that are slowly but surely injecting themselves into this climate that are no income verification type loans. But they're not for everybody.
Right.
Higher rates might be a little bit more cost, would require a lot more cash injection for down payment.
Sure.
In the neighborhood of 25, 30, up to 50%. It just really depends. But having some form of documented income always puts you in the best predicament and pretty much guarantee that you're going to win.
That makes sense.
Yeah.
Okay. All right.
Next question.
Hi, on a current mortgage, is refinancing the only way you can get rid of your PMI?
Yes. Unless you sell the house.
So explain to everyone what PMI is.
All right, so PMI is private mortgage insurance.
Okay.
And usually if you put down less than 20%, that mortgage is going to have PMI unless you're doing some form of an alternative loan.
Gotcha.
And usually on an alternative loan, you're going to have a higher rate because the PMI is factored into that rate.
Right.
All right. And there are some conventional loans that allow you to also roll the PMI and the rate, but it's going to be a little higher rate.
Excuse me.
Gotcha.
That's just full transparency. But yes, refinance. Well, let me take that back. If you're in a conventional loan and you can call your current mortgage servicer and say, hey, based on the activity in my neighborhood, my property value has gone up. I want to drop my PMI. They may allow you to order an appraisal, or they'll order an appraisal on your behalf. And if that is in case the fact that your property has appreciated, then they will drop the PMI without having to do a refinance.
Good answer. So maybe check into calling your mortgage insurance and see if they can,
The servicer.
the servicer to get you another appraiser. Next question.
So, Steve, I've heard you mention Credit Karma, Credit Genie and stuff, and you indicate that the FICO score is more prevalent to get than the Credit Karma. So how do you get a FICO score instead of Credit Karma? Do we see the Credit Karma?
You have to get a bank credit inquiry. So we are heavily monitored, and there's an oversight committee. So like to tell you how serious it is, I had a client that went through my full approval process a year ago and told the credit agency that she never authorized us to pull her credit.
Oh, boy.
Fortunately, we're very organized.
Yeah,
I had
paperwork.
total record of the fact that, yes, on this particular day, you gave us authorization. Yes, on this particular day, you provided us with all of your personal information,
Wow.
which said you had intent to apply for the mortgage. So they really fully monitor us when it comes to the FICO side of the credit. I can't recall the actual site off the top of my head. There's one that's fairly close, but there's nothing more accurate than when you're getting some form of a bank credit inquiry.
Okay.
And it's also different because we've had people apply for car loans, and that's more on the consumer credit profile, and the credit scores were different. So it was like, how can I buy this car, but I can't buy a house? Right.
Yeah.
So, I mean, yeah, it's a
That's
tough
always a
conversation to have often, but there's just a stern reality.
Got it. Did that answer your question? Do you have a follow-on?
Just for full understanding, so the only way to get a FICO score is you have to go through, the bank is the one that authorizes
Yes.
your FICO score, not, so on the consumer side is Credit Karma, but the FICO score is the entities of the banks and the lending institutions.
That is correct.
Got it. Okay.
Great question. Next question.
Hey, I had a question. You said that you sold a house for 50K over the market value, right? And I want to know if, because you're saying that it's a seller's market right now, so in 5 years or whenever the market changes, will that value still stand, or will you be upside down? Like if you buy a car and you got bad credit and you paying 20 grand for a car that's worth 14 grand. So you understand what I'm saying?
Good
So
question.
will you be upside down on the value on value in that case?
Norman, you want to take that question?
You want me to answer it?
Well, you basically saying, so is the market going to crash in the next 5 years, and am I going to be upside down?
Yeah,
Pretty
I
much.
want to know if
It's
I-
highly
That's it.
possible.
Yeah,
I
that's
mean,
it.
we went through that crash before.
Yeah.
It was a very turbulent time. Like, my house had gotten up to about 600,000 where I reside at, and when the real estate market took a turn for the worse, and the market tanked, my property value went from 600 to 300.
Oh, wow.
Wow.
Right? And I'm just starting to kind of get back to
Build it back up.
some type of normalcy. So, I mean, it is possible, but hopefully our government would do their part to help keep the economy stable. And
That's
the way
the
that
key.
we do that
Right.
is, of course, finding ways to keep get these employment numbers back, keeping people employed, because as long as people are employed, they're going to be motivated to buy and sell real estate. All right. Make sure that they do right by the economy, where we keep these interest rates where these homes can be a lot more affordable. Also, let's find a way to make sure that there's some form of a guarantee that there's going to be some affordable housing. Don't let these builders come out here and build just $1 million homes without making it
Absolutely.
affordable for the little guys like us, right? So it's things like that that we're hoping that they manage to keep some form of a balance. But the economy can shift. But even if it shifts to a buyer's market, that doesn't mean that it's going to impact the property values, just that you have a lot more inventory, so it makes it a lot harder for you to be aggressive with, I want this high amount for my house versus this lower amount of my house, because there's no demand for it
Right.
at that point. So it's because there's a demand is what's contributing to
The value.
the increase of value. Yeah.
Great question. Next question.
I have a question. Do you all have experience with clients that want to buy tiny homes? And what advice would you give a minimalist client or family looking to downsize and purchase a tiny home? And also, would you suggest purchasing the tiny home from a builder or purchasing the tiny home within a subdivision?
I know you.
Okay.
The tiny-
All right.
Oh,
So
none about tiny
actually,
homes.
when we got introduced to that question before we started, this current market, we haven't really seen a
So
lot of
not to
activity.
cut you off, but explain to the viewers who aren't aware of what a tiny home is.
So a tiny home is technically a manufactured home that is a lot smaller than your traditional home.
Got it.
I would probably say your traditional home is what, give or take about, up in Baltimore, it was 900 square feet on a 3-bedroom.
Wow.
So
Okay.
a tiny home will probably feel something like a hotel room
Gotcha.
type
Okay.
environment.
Okay.
I guess that's a good way of putting it. And so they are coming up with new concepts where they're putting them in like box shipping containers. I know that there were a few that were built in DC, but it hasn't taken the full swing yet in this environment in the DMV. But I think with the tiny houses, it's going to make home ownership a little bit more affordable for those that are interested in the tiny home.
Got it.
And it just really kind of depends. We haven't had a demand for it.
Gotcha.
So if the mortgage industry dubs it as a manufactured home, we'll have loans for days for it, because I noticed that even today reading my emails, a lot of my banks that I do business with, they have been soliciting this manufactured home
Gotcha.
mortgage program, which falls under FHA,
Got it.
which is a great program for that. So I'm assuming that it's going to fall under that, but we haven't really had a lot of conversations about it until today, to be honest with you.
Got it.
Okay.
Good question. How many more questions do we have time for? Okay, we have one more question. We have time for one more question.
Okay, I have a question about soil testing. Many homeowners, especially in these times of food shortages, are interested in growing their own fresh produce. what processes or programs are available with regards to soil testing before and/or during the home buying process?
Great. All right. So soil testing could get a little tricky because the banks today, they try to shy away from anything exotic. They want it to be straight and narrow,
Standard.
clean cut, standard, right? If there is a mortgage product that would be a good fit for something like that, we will be looking more at a rural territory type home, like what is called USDA. That's not, you can't use USDA in an urban environment. So like a good example of locations like Brandywine, Maryland, Calvert County, locations like that, that's where USDA is very popular. It's like a laundry list of them, but that's a great example. If it doesn't fit inside of a residential mode, then you can do USDA on the commercial platform. So I had someone looking to buy like a ranch type property, and it didn't work residential because of the complexity of how much land it was.
Got it.
So we entertained doing USDA on the residential side, on the commercial side, I'm sorry. And that seemed to be able to bring that transaction to the forefront.
Got it. Okay. All right. So before we close out, you guys have been amazing. You guys have given so much information. Don't you guys feel like this segment still wasn't long enough? So much powerful information. So Norman, give everybody your social media handles. Now you see why we call these guys the mortgage and real estate experts.
Right.
So give everybody your social media handles, Norman.
All right, Instagram, you can follow me on at Harvey Homes DC. On Instagram, Facebook, you can look me up, just Norman Harvey, Norman the Realtor Guy Harvey on Facebook. And you just want to call me, just give me a call at 202-560-6264. You guys thinking about buying a house or actually selling a house, definitely give me a call so we can chat about it and we'll get you pre-approved or we can get you ready to sell that house.
Awesome. Tell everybody what your social media handles are, Steve.
That's with my social security number.
You did not.
For me.
Well, you gonna give it to me?
No, you don't want it right now. All right, Steve Twyman on Instagram, also on Facebook, which is my name, STEVETWYMAN. And it's been a joy, Chelley. Thank you for having us. We put this together months ago, and you said, Steve, we're going to make it happen, and you did, and I commend you for that. I truly appreciate it.
Absolutely.
Humbly,
Definitely.
I say that.
My goal is to do this, not meaning to cut you off, but my goal is to do this at least 3 times a year, because like I said, it's important for us to put the knowledge and the information back into the community. So I appreciate you guys. So I look forward to working with you guys. So my goal is to have this segment. Next segment will be an hour and a half with you guys.
It doesn't matter because we haven't even scratched the surface.
I know. I know.
So, all right, and then if you need me or any mortgage experts, you can just call my office. I got a ton of them that are awesome loan officers, 301-341-2200. We're moving to a new location effective Saturday. We're moving to a new location this Saturday, right on 9500 Arena Drive and Suite 102. So stop by and show us some love.
Perfect. Thank you. You guys were amazing. I hope you guys took some great notes. I hope you guys were able to get some great tips. It was very powerful and very informative. Thank you guys for continuing to support me. You guys have a great night.
Do you or anyone you know have a business or a brand you want to promote? Would you like to be a guest or be a part of our studio audience? If so, contact us at thechelleyroyshow@gmail.com or contact us on Instagram at thechelleyroyshow. Can't wait to hear from you guys.